This podcast includes information provided by the issuer and does not express the views of the interviewer. This podcast may also include forward-looking statements by the issuer that involve certain risks and uncertainties to its business. Because forward-looking statements are subject to risks and uncertainties, the issuer's actual results could differ from those indicated in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT, and you are listening to episode 57. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the microcap message. For this episode of the Planet MicroCap Podcast, I caught up with Sam Namiri from First Value Investments. With the LD Micro main event coming up in Los Angeles next week, I was interested in learning what investors should do to prepare for an investor conference, how to translate that preparation to action, and then post-conference follow-up. Sam has been going to LD Micro conferences for the last 10 years, and I thought it would be fun to discuss this topic with him. The goal for this episode is to learn more about what Sam does to prepare for an investor conference, at the conference etiquette, and post-conference follow-up. Thank you again for tuning in to episode 57 of the Planet MicroCap Podcast. Please enjoy my interview with Sam Namiri, but first, a word from our sponsor.
A comprehensive streaming of market data, research, and portfolio management application for you. QuoteStream is a real-time streaming quotes and research system designed for the day trader, retail investor, institutional investor, both new and old. QuoteStream offers low latency, tick-by-tick data, advanced charting, comprehensive technical analysis, news, and research. With no software to install and no servers to maintain, QuoteStream is the ideal solution for you. Go to stocknewsnow.com and start your free 7-day trial. Click the QuoteStream banner in the header or real-time quotes in the nav bar to get started building and managing your investments.
For this episode of the Planet MicroCap Podcast, I have Sam Namiri on the program. He is with First Value Investments. Sam, welcome back to the Planet MicroCap Podcast.
Thanks for having me, Bobby. Always have fun doing this.
It's fun having you back, and thanks for taking the time before Turkey Day. I wanted to start off first, for those who missed our first interview that we did together on the podcast, what is your background?
So just kind of run through what I've done throughout my career. I studied engineering at UC Berkeley. After school, I worked as an engineer for 1 month. During that time, I also had a jewelry business that I started while at school. That 1 month that I was selling jewelry, I made more money than I would have made as a full year as an engineer. So I quit my job and ran a jewelry business full time for the next 5-6 years. I predominantly was selling online. I started off selling on eBay, actually. Grew that and started selling through auctions online. And then also, started a TV show where, was kind of selling like a HSN QVC type of television show, and eventually, you trying to contract manufacturing and set up our own factory in Pakistan as well. And then I got accepted to business school, and I decided that wanted to do something different after the financial crisis happened. The jewelry business didn't quite do so well. The price of metal shot up quite a bit, and then got accepted to Columbia Business School and went there. And I started studying value investing there and fell in love with it. And since then, I've been at Grand Slam Asset Management for 5 years, and left there in August to start my own firm, First Value Investments. So looking forward to it. I'm excited. And that's kind of where I'm at now.
Nice. And what, if you don't mind me asking, what was some of the impetus for the change? Were you looking to kind of just set up your own shop? What was going through your mind for that decision?
So I think the biggest issue that investment management firms have it's less on the investing side. It's more on the, getting investors, which I don't think many people like to do or enjoy doing, especially people who love investing. And so the real issue there was that we just weren't able at Grand Slam to be able to raise money. And so, yeah, I mean, that a lot of that is, it's its own sales job to go and pitch your own fund, just like a lot of, microcap companies come and pitch their companies and businesses for investors to invest in. So, I'm sure a lot of, CEOs and CFOs of these public companies don't like doing that. A lot of the really good ones, especially, they want to focus on running their business, right? And so, I think the same thing comes with investment managers as well, too. Like no one, I don't think, enjoys going out and pitching to investors, to invest in their fund, but really, like, to make it a real business and a business model, you kind of have to do that. Mm-hmm. So, yeah, I mean, so at Grand Slam, that was just the biggest issue, was just being able to raise money was tough. And I just thought, why not go and do it myself? And I could, not even need to manage too much money. And I kind of feel like I have a niche in microcaps that a lot of other people, a different investment style that a lot of other people don't have, which allows me to, hopefully get some good performance.
And Sam, again, there's going to be some people that may not have heard our first interview that we did last year, where you actually went into this more or less your criteria for a potential microcap investment. So, for those who may not know, what is that style of microcap investing that you're referring to?
Sure. So a lot of it is based off of, I guess, like fundamental bottoms up value investing, which is I look for a company that, based on valuation of their cash flows. So to me, like, cash is king. And I really predominantly ask myself three questions. The first question is, do I like the business? If it hits certain characteristics of businesses that I like does it have like recurring revenues, whether contractually or, for instance, like a coffee company, for instance, I think that's generally a pretty good business because, once you drink some coffee, that coffee's gone. Like, you're gonna most likely drink it the next day. And so that to me is like a recurring revenue type business. That's the first thing I look for, is, do I like the business? The second thing I look for is, do I like management? Do I think they're aligned with, shareholders? Do I think they're good operators? Do I think that they're good allocators of capital? Those are like the three main things I generally ask myself. And the third question I ask is, am I paying the right price? Mm-hmm. And valuation, and that's super important. Like, occasionally, if I find a business that I don't like as much, but the price is just so attractive, and again, it's always usually based on cash flows. If the price is so attractive, then I'm willing to not invest in such a high quality business at a lower price. Mm-hmm. And so, yeah, I generally look for something that can at least double within 18 to 24 months. And if I don't think I have that opportunity to at least get that type of return on the stock, then I'm not interested. So that's my kind of investment style. And then I do a lot of research. And I think with small and micro caps, the key in the research is to actually get on the ground and not just read filings, and SEC filings, and read their call transcripts and talk to management. I think it's really important to go visit the companies, to talk to other people within the company, to make sure that they have the right systems within the company in place to be able to combination of track their own performance and then also be able to grow and expand and do what management says they'll do. Mm-hmm. And I also go to trade shows and I read trade magazines and I try to talk to suppliers, customers, competitors, everything, to really truly get a sense of, do I think that things are going to pan out the way that, either maybe management is guiding towards, or what I think myself in the future.
Mm-hmm. So this is a great segue into the main reason I wanted to have you on today, because we got a big conference coming up in about 2 weeks, the LD Micro, the 10th annual LD Micro, and you mentioned just now that one of your key criteria is that management is really important to you. One way to meet management, in a an all-in-one setting, so to speak, is going to investor conferences and having a 30-minute one-on-one with them, or going to hear them present, at least shaking their hand and getting a feel for who this person is and whether or not they fulfill the type of characteristics you're looking for. So while I've done a couple episodes on how to talk to management and maybe some questions to ask in your one-on-one meeting, what I wanted to do here was talk about as an investor, your prep, your how you act at the conference, how that translates, and then when it comes to your follow-up after the conference. So for you, going into an event, let's say like an LD Micro where we have 250 plus companies that are going to be there, how do you prepare yourself for a conference like this?
So LD Micro is unique because there are just so many companies at LD Micro. I was at another conference 2 weeks ago, and they, LD Micro is 250. He said, I wasn't quite sure what number it's gotten up to, but like the other conference I was at had like 50. So it's a lot easier to go and sort through 50 companies and find, like manually, than it is at LD Micro. And the other thing that makes LD Micro so unique is that, the market cap of the companies is so small that it's not easy to find information a lot, like public information, like filings are even difficult to get at times, or the financials are hard to screen. So yeah, it becomes a little bit more difficult. While like if you go to a small cap or a mid cap conference, a lot of like Bloomberg or Cap IQ or all these other data sources, they'll actually go and like kind of clean up the financials. And like take out one-time expenses and other things of that sort. So it makes it a little easier to screen. While again, like a $11 million market cap company, they don't have like analysts covering the stock or other things that help a little bit in terms of guide, like as to whether something on a valuation basis looks cheap in the future or not. So what I did for LD Micro was I would use one of the data providers. Like in the past, I'd used Bloomberg. Now I use Cap IQ, and there's a few other ones too that aren't as expensive. Like Sentio is one that I've actually been looking at. But anyway, you can use, or QuoteStream I think is another one as well too. But yeah, you can use those, and I pretty much get all the tickers. I put them all in Excel, and I use some Excel functions to look at. I think there's like 9 or 10 different fields that I look at. And I used like a combination of things. There's a book by Joel Greenblatt called The Little Book That Beats the Market. And he kind of has an equation of what he looks for. And I think from the book talks about like a formula that he uses. And he doesn't even look at the companies in this formula, but effectively he picks the stocks that are cheap, trading at low EV to EBITDA multiples, low PE ratios, high return on investment capital, high return on equity. So I look at all those things, and I try to pick companies that kind of fit that formula. Mm-hmm. So it's the original screen that I do, and then I go, and there's certain sectors that I don't look at, and so occasionally, like I'll go and I'll just cross those off. Mm-hmm. From whatever shows up from that screen. But that's usually my first initial thing that I do for every conference that I go to. Mm-hmm.
And then, do you still screen, like, let's say, you look at that list and, you see, a few names that already, or that maybe you're already invested in. Do you cross those off, or do you like to take a follow-up meeting with them there to kind of get an update, or, how does that work in your head? Because I know you don't want to go to their on-site every single time, a company has a new update,
Yeah, I don't usually, like, the conferences don't happen that frequently enough where it's kind of worth it to still get an update if it's been like over a month since I've talked to management, or let's say it's like after the earnings came out. You kind of want to get an update. Sometimes companies will send like sometimes they'll send like their CFO during a conference when usually it's the CEO. And it kind of sometimes never hurts to talk to someone again. You kind of see how things have panned out, or like whether their messaging changes. as well. And so, sometimes slight nuances
Mhm.
in just like the wording can make a difference.
Mhm.
Yeah. So I mean, especially if it's something that I have a large position in, that's a big part of my portfolio. I can spare, a 30-minute meeting, even if I don't learn anything from it.
Oh,
That's
you
that's
can.
still
Oh,
okay
you
with
can
me.
now. Oh, that's good. I'm glad you can spare 30 minutes. So, Sam, how do you, then balance out your schedule after you did your initial screening process? How do you determine what companies you want to take a one-on-one with, and then see their presentation? How do you work that?
Yeah, that's a really tough question because it really depends. In my opinion, I've actually gone from both, like from one end to the spectrum to the other, and I'm still trying to figure out what's the best thing that works for me, and also what's the best thing that just works in general. But I used to only go to presentations originally. Then I at some point like started to only do just one-on-ones whenever I went to a conference and didn't go to any presentations. And then now it's kind of become like a mix of the two. And yeah, I mean it's really tough because it's so much of it is luck as to what adds more value because behaviorally, like different management teams and different people like act differently. Like some are more open in a presentation setting. Some are more open in a one-on-one setting. In a presentation, they may get to something and talk about something different than you'll talk about or ask about in a one-on-one. Um, and so, like, I've been to a presentation of a company that I've had an investment in, and I've known very, very well for a long time. And I actually had a one-on-one as well as saw the presentation at a conference with them. And in the presentation, they gave information that I didn't know or know about. So, um, when you see things like that, you kind of, come back and say, hey, you know what, maybe presentations are pretty valuable as well too. So, I've kind of learned to kind of mix them both up. And if I'm interested in a company, I probably will end up doing both presentation and one-on-one. And it's also hard because if you don't know the business, like a lot, like what's great about LD Micro is that so many of these companies, a lot of people, like it's their first time coming out and meeting with investors. And so it's a great opportunity to be one of the first people to learn about a company. And so again, that really depends on personality, like which one's better. Like sometimes in presentations, the presentation just goes so slow, or they don't even talk about, maybe they have a product and they don't really explain the product well. In a presentation, like it's not, I mean, you can go interrupt it, but a lot of times, like they may get to it later on in the presentation, you don't know that, right? And
Mhm.
so you're less likely to go and say, hey, you know what, like, can you explain your product a little better or explain this a little bit better?
Right.
But in a one-on-one, right, you can very easily do that. So I think it really depends on, I think, your own personality as to what is better and what's not. I'm still figuring out like what's the right mixture for me,
Mhm.
and also I think it also depends on the conference as well too.
Mhm.
So, a larger conference, I think it's going to be tougher to figure out like which one to do. And then a smaller conference, especially if you can actually do more research about the companies and the companies are more well known, there it's probably less advantageous to look at a presentation because you can probably go webcast it. And I think that also makes a difference too. And for me, in terms of whether I do more one-on-ones or do more presentations, if the presentations are webcasted, I'll probably be less likely to do a presentation. But if they aren't webcasted, then I'll more likely go to a presentation.
And you probably
I hope.
more. And
I,
I was. Oh,
I,
sorry, I didn't mean to cut you
sorry.
off.
I was gonna say I hope that answered your question, but
No, that did
pretty much
actually.
it,
No, no.
it depends.
Right, right. No, no. And I was gonna follow up to say, some management teams, you watch part of their presentation, and I mean, you're experienced enough to know, like, oh man, there's no way he's getting through everything in this presentation. Like, I think I'll do a one-on-one so I can, get maybe a full story, because there's some management teams. I mean, I've sat there, and they're just not good presenters, and you're falling asleep, and you're just like, I like, and there's something dynamic potentially or interesting about the company, but you're just like, oh man, like I think that maybe this one would be better for a one-on-one setting,
Yeah, yeah, yeah. I mean, but you would hope that that they've actually practiced their presentation and it's like well thought out. But again, like
Well,
that doesn't.
I know one company off the
At the end
top
of the day, at the end of the day, you can make a lot of money off of those really boring presentations.
So you hit on my next question quite a bit, but I figured, there might be some more to add here, and that's in terms of, you've done all this preparation for the event, then how do you then translate that, while at the conference? Do you kind of have your set plan, you stick to it, or do you kind of, adjust as you see fit, depending on what, has captured your interest?
I adjust to see fit. Like sometimes if have a one-on-one and it really sparks my interest and I don't have another meeting or presentation afterwards, I'll keep talking to management if I can. And then like what's interesting about conferences as well is that, sometimes you see management at a bar, at the bar, and have a drink with them or, have lunch with them or dinner afterwards. And just get to know them a little bit better, on a personal level, like just to kind of see like what type of people they actually are. And so just interesting. And then also the other thing that's great is you can get a lot of interesting information about like, I guess, other companies or other industries, like how one management's business is affecting another industry. And you may not need to directly research one company that you're talking to, but like, let's say I talk to a company that sells products to casinos, they would probably have good insight on how, the casino industry is doing and, what else is hot in that industry, right? Who are they competing against to sell their product to? Or just to get the casino owners to spend money on, like what else are casino owners spending money on? And so there's a lot of, I guess, like tangential research that you can get at a conference, and you just never know like where anything or any thought or any potential investment may come from. So that's where I kind of go off of path. And again, like I try to prepare a little bit, but you can't really prepare too much unless you already know the company well, and make a presentation and met with them before, because again, like I think just like you, when you interview or talk to someone, right, one answer will lead to a next question.
Right.
So, especially with companies I don't know, I try to go in pretty almost blank slate. And then usually, I think you probably will ask this later, but usually a lot of times most of the work happens after the conference.
When it comes to that, what do you do? Do you have an investing journal for all your notes and correspondence? How do you handle the post-conference, I guess, melee, so to speak?
Yeah. So for me, because I'm such a concentrated investor and I don't really make too many investments, if it doesn't stay in my head, usually that means it's probably not interesting enough to me. But now I'm starting to take more meetings and trying to, when you find new ideas and you find like a few ideas, it's probably worth it. I mean, I found it worth it now to, do some more work on things, because a lot of things actually don't pan out. Like when I do more work on it after a conference, you realize that there's like this a large potential risk that kind of makes it for me uninvestable, because again of the concentration that I do take in my investments. I can't. One miss will hurt me a lot. While if I had like 100 investments, for instance, one miss like would hurt you like 1%. So that doesn't really hurt too much. So. What I do now is I started using OneNote, Microsoft OneNote, and I used to use Evernote. Effectively, they're the same thing for me. And so I keep like a research folder for every company that I look at. And that was taught to me by someone else who goes to LD Micro and meets with a ton of companies. He's won awards for having the most meetings there. So. But his style of investing is very diversified. So he has 100 positions in his portfolio at one time. So he kind of has to do that. But I just kind of took that, I guess, what he did in practice and took it on my own. And then so follow up what I always usually do. If it's a company that I don't know well, I'll go and start reading all their SEC filings. I'll read their Ks, Qs, rate 8Ks. Go over their last at least like year worth of conference calls, and just kind of like match with my notes and what they told me. Like what were some of the key points they told me, and like did they mention stuff that, again, like they're trying to pitch their companies to me, right? So they're not going to talk about potential negative things, right? At least like a lot of them don't. And so, then I'll try to arrange a follow-up call to talk about some of the risks that I see from reading and doing my research there, right? Because now I have real questions that, potentially could be clouds on the company and not just all pure sunshine. So, I mean, that's usually like how I follow up on companies that I don't know. And then companies that I do know, if I learn anything that I think like makes me feel like I need to adjust my projections of them going forward, then I'll usually go and adjust that in my financial model, which I talked to you about, I think, in our last podcast. So I'll adjust maybe my revenue targets and different costs. Maybe they had a restructuring, and during our meeting they were able to better communicate that restructuring and how that affects costs in their business, or things of that sort. Like maybe they had a bad quarter, but now I know or think it's a one-time issue and not a recurring issue. That'll help me adjust my model going forward, which affects my valuation of the business and what I think the stock is actually worth.
I mean, this is kind of a funny question. I mean, have you ever, after going to a conference and you met with the company, or a few, and like right after you bought or sold the stock, you're like, oh, I don't care. This is not what I normally do, but I'm getting in, or like, holy, I'm getting out right now. I mean, has that ever happened to you?
If I ever get in like that, I'll get in like with a very small position. So something that wouldn't even matter. It's more of like just to like make sure I don't forget about it. Because when you actually own shares, you're less likely to forget about a company than if you don't own any shares and maybe they're on a watch list or something of that sort. There's usually more companies on a watch list that I watch versus actually own. So for me, that's like one way of tracking things a little bit better. Selling right away, I haven't had one yet where I sell something after coming back from a conference. Maybe I'll like lighten up in a position, but like to be like a no-brainer, like sell everything after a conference, I haven't had that yet. More likely, it's usually probably after like a quarter is released and they release some sort of like, usually it's like the quarterly calls where you truly get like a lot of material information. So like if there's actually something that has hurt the business and it's something that's a permanent impairment to the business, in my opinion, that's usually what'll get me to sell a stock. But at conferences, I'd say like the biggest benefit I've ever had at conferences have always been to find new companies to then go and delve into and do more work on before making an investment.
Right.
Like a material investment.
Right. So, Sam, you've been going to LD for years now. I think even before we started going to LD, how has it changed over the years?
Well, the first one was at the Omni Hotel in downtown. I don't know if you knew that or not. But I can't even remember. How long was that? 10 years ago?
Wow. Well, this is the 10th. So you were at the first.
Yeah. And now there's 2 conferences a year, so it feels like a lot more than 10. But yeah, that one was at the Omni, and other than more companies and adding more days, it feels pretty much the same. I think there was like a few years ago where I think it probably got overcrowded, but it scaled back a little bit in terms of, I guess, number of people there. So I mean, it's what I know I'm always going to get from going to LD Micro is I'm always going to find companies that I've never even heard of before. And so Chris Lahiji does a good job of I think bringing companies in that, it's like their first time presenting, or New management has come on, and now they're actually starting to talk to potential shareholders. Like there's some private companies there as well too. I mean, like 250 companies. There's no way that a lot of them are going to be repeats year over year over year. And I think Chris purposely makes sure that doesn't happen, so that fresh blood there. So, some years you find great things, some years you don't find, or at least I don't find things. But I promise you that of the 250 companies, there's going to be at least a handful that are going to be, huge winners. So the key is obviously identifying them and actually investing in them.
That's for sure. I mean, and not to mention, it's you always have a fun experience. They're just the best hosts, and yeah, no, we look forward to it every single year, and it's always fun to hear how it's changed, But it sounds like more or less it's had that same kind of core philosophy. So that's really cool to hear. So so Sam,
I don't know if I enjoy it as much as maybe you do. Because I'm always just running around from meeting, Yeah, and you get to go in interview management, right? So,
I'm just interviewing. I'm just doing interviews the whole time. So I don't. I'm not. I maybe run to go get some Chinese chicken salad, but that's pretty much it. But
and I feel like the days have also gotten longer over time. I think the first meetings are like at 7 or 7:30. I forget what time they start, and then go to like 5:30. And I know for me, the more recent years, I've had certain days where maybe I've only had like a half an hour break. So they become pretty long days, and you kind of struggle to figure out when you can eat lunch or when you could go use the restroom.
Well, Sam, we're going to be in a room. We're going to be in a room this year. So if you need to hide out, just come hang out with us.
Okay, good to know.
So Sam, my last question here today, is what's your advice then for new microcap investors going to their first microcap investor conference? How do you think they should, prepare themselves for an event like this?
I would probably, you got to think you just got to spend time and I would go to ldmicro.com. Ask Chris if you're fortunate enough to get an invite to the conference. I would, they actually did a good job of sending an email out that has all the companies and different characteristics of it, and then a link also to ldmicro.com that gives financial information, what the company does, what sector they're in, pretty good amount of information, recent news releases. And so you can just if you just go click one by one and find companies, that's the way that you got to, I guess, prep beforehand. And then while there, if it's your first conference, I would probably just go sit in a bunch of presentations and, maybe do a handful of one-on-ones with companies that, pique your interest more. And maybe you can even do them at the conference, set those up. Sometimes I'll go to a presentation and I'll be like, oh, wow, this is actually really interesting. And then I'll run over to the one-on-one desk to see if it's possible for me to get a one-on-one with them, or if they can contact management, maybe they either later in the day get a one-on-one or the next day if they're still around. And that's happened to me probably 20, 30 times throughout the last few years. And so, I think that's kind of the strategy I would do if it was my first conference, would be to just kind of click through and go over every company that's there. And then set up meetings if you can with a few, and go to presentations. Just try to go to as many presentations and try to stay focused. They become pretty long days, and to try to stay focused from the beginning of the day to the end of the day becomes tough, and it feels like a marathon in a way. So especially if you don't know the businesses and they're all new businesses to you, and I'm a generalist, so I look at a wide range of industries, and so I'm not a pro in too many industries, but when I start to learn about an industry that I don't know very well, that becomes, again, mentally pretty exhausting. So I think that's really the key. It's I guess over the years, I've gotten better at staying focused throughout the whole day and being able to comprehend as much information as I'm getting, especially in one-on-ones, because in one-on-ones, it's just you and them, right? So it's 5 o'clock on the third day, and you're pretty tired, but you still need to focus because this could be potentially a really good investment. Mm-hmm. While if you want to go to a presentation, like I see people, on their phones, I've even seen people fall asleep watching a company's presentation. And so again, like you can kind of check out in that instance, and so it becomes, again, more exhausting doing one-on-ones than it does just sitting in presentations and just trying to learn that way. Mm-hmm. So I mean, yeah, I think it depends on your personality. Depends on, how much mental stamina you have to be able to handle in one day. But that's why I would start off more doing presentations versus one-on-ones.
Mm-hmm. And there's usually a good amount of coffee served throughout the day. So if you happen to be a caffeine person, there is you can get your fix throughout the day. That's for sure.
Yeah, coffee and carbs. A lot of pastries, a lot of bagels, pizza, sandwiches.
Yeah, they feed you, man. They definitely feed you. So yeah. Sam, where can our audience go and find more information about you and First Value Investments?
Sure. You can go to my Twitter handle is probably the best place. It's my first initial S and then my last name, Namiri, N as Nancy, A as Apple, M as Mary, IRI. That's my Twitter handle, S Namiri. And then I have a website, but there's not really much on there to really learn much about it. But it's FirstVI for firstvalueinvestments.com.
Sam.
So yeah, that's my website. Really appreciate it, Bobby.
No, thank you, man. Thank you so much for joining me today, and have a very happy Thanksgiving. And I'll see you in a couple weeks.
Yeah, and also if anyone is coming out to LD Micro and wants to reach out in advance, so we can connect there, feel free to shoot me an email or go on Twitter and send me a message.
Cool. All right. Thanks, Sam. Talk to you soon.
Thanks, Bobby. Take care.
Thank you all for tuning in to the Planet MicroCap Podcast, and thank you, Sam, again for coming on to the program. You can access the podcast by going on to stocknewsnow.com under podcast, go to podbean.com and search Planet MicroCap Podcast, or on iTunes and search Planet MicroCap Podcast. Stay tuned for the next Planet MicroCap Podcast, where we'll have our next guest to discuss all things microcap. If you have any questions or comments about the podcast, please send an email to info@snnwire.com. I'd love to hear from all of you. This podcast has been brought to you by SNN Incorporated, publishers of StockNewsNow.com, the official microcap news source, and the Microcap Review magazine. I'm your host, Robert Kraft, and thank you again for joining me on the Planet MicroCap Podcast. Have a great week, everyone.